My next guest has been touting them for a while and is sticking with it as part of his diversified portfolio. Michael Cuggino is here. He is president and portfolio of the Permanent Portfolio family of funds. Michael, I'm so glad you're here because I haven't had time to catch up on the precious metal story. Why are we up so much the past couple months? The miners are up 30% since October. I mean, this is out of the ordinary.
Hey, good afternoon, Kelly. Well, I think they were sort of gold, silver, a lot of the precious metals were in a consolidation year last year after a run-up in the previous years. There were some reasons for that. I think the biggest was probably the strong dollar. The dollar was hitting all-time highs and multi-decade highs against other major currencies. And, to the extent that that occurred, that was putting, some risk on the dollar. Plus, you had the aggressive Fed moves on interest rates, which, again, is usually a bearish indicator for gold. As the market perceives the Fed to be closer to being done, that remains an issue, a question, but maybe a direction we're going in. And the dollar is not likely going to sustain the levels it has. Investors, I think, are taking a fresh look at the precious metals on a longer-term basis, as they should. This is a good hedge against stock and bond risk, against uncertainty and inflation and money creation. And those issues are all very relevant right now. They were last year, but prices didn't reflect that, and they continue to be going forward.
Right. And so I guess now we have a situation where we say, okay, you don't want to jump in on something after the action's already happened. And are the same conditions that led to the rally the last couple of months still in place right now?
Well, absolutely. And I think that gold could go a lot higher, as well as some of the other precious metals. Obviously, like real estate, every precious metal has its own individual dynamics. But the fact of the matter is, we just passed, $3 trillion plus in new spending in the last 6 months that hasn't really hit the economy yet. You've got a potential recessionary scenario where gold typically performs pretty well in that environment. And so I think the reasons, we look at it as a long-term investment, not a trade. If you're a trader and it's bumped, $100 in the last week, you might want to wait till a better opportunity comes. Although we would view it more as figure out how much of this you need in a diversified portfolio and as a hedge or whatever reasons you want to own it, and stick with that. And then maybe you buy on dips, but you hold it and gradually add to it versus trading.
And like you said, this isn't the whole portfolio. So what else do you think is attractive for this year and for the kinds of conditions that you just described?
Well, it's a mixed environment with a lot of volatility, and we see a lot of the volatility from last year continuing this year. I think there's a big push-pull between the idea that we're getting close to a recession or at best a soft landing, but that's restrictive interest rates, et cetera, and that's being offset by liquidity being pumped into the market through federal spending programs, which hasn't hit the market yet. So we may see an inflation decrease here in the shorter term. That seems to be the direction we're going. Although I think it's going to be more stubborn, and I think it's going to be much harder for the Fed to get to the 2% that they're objectifying, I guess. And that makes sense to me in the recent comments from the Fed about higher rates for longer. Makes perfect sense given the environment that we have in the push-pull environment. So with that in mind, diversification. I mean, we're not negative equities, but equities have some headwinds, and so you want to be selective. Companies that make money and control their cost structure. Yeah. In bonds, we're pretty short duration and high-quality balance sheets.
No, it's a theme we hear over and over. Again, a lot. This is the playbook, so to speak, that everyone's trying to scramble to catch up on. Michael, thanks for your time today.